Okay, so as we get into our last section of Chapter 2, we're talking about the trial balance. And it's really simple. It's basically if you can find numbers in one spot and move them to another spot, you're good to go. So here's what you need to know. Clicker's not working here. Here's what you need to know about a trial balance, which you already probably have in your notes. Just lay my lecture notes over your handwritten notes. A trial balance, by definition, proves the mathematical equalities of your debits and credits. So basically, after everything you've journalized, posted to the general ledger, you still want to make sure your debits and credits equal, and this is a little checkpoint to do so. I do like how they mention that, you know, you journalize and then post to the general ledger. So of course, this is the big chronological. These are the little snapshots. And you basically take a look at what the snapshots have for balances and list a debit and credit listing in the form of a trial balance. It is listed in order of the general ledger. So you list all your assets, then liabilities, then owner's equity, then you list revenue, and then you list expenses. So that's the vertical order of your trial balance. It's usually only done at the end of the fiscal period before you get rolling with all your financial statements. So it's a checkpoint to ensure that your financial statements are going to check out. Again, the reason why it's done at the end is because that's more of a true picture of what each account is going to look like. It would make no sense to look at cash at the beginning or cash 2/3 in, because that's not the full story on cash. It's usually done at the end of the fiscal period. Here's what one looks like. It's simply got a debit column and a credit column, so left and right. Again, the order is, it's got assets, it's got liabilities. Oh, I was a little bit off. They throw the revenue expenses right in there. So it's basically listed vertically by ALLO. And of course, you want your accounting equation to work out at the end there. Why do we see a jumping between debits and credits? Why do we see some debits and why do we see some credits? Yeah, certain accounts, these are their normal balance sides. Those are the normal balance sides. Cash, supplies, prepaid, insurance, equipment, those are all assets. They have normal balance accounts, or debit balances. When we move to the right side of the T, when we get over to the payables and some of the owner's equities, then they become credit. What's up with these? Drawing and these two expenses. Why did those pop back over to debit-based? They're the naughty accounts that don't follow the owner's equity rules. Do we see some rulings down here? That's it. That's it. So now let's put it to practice and let's do some brief exercises. We're going to do one brief exercise and then we're going to do one of the do-it problems. It's kind of strange. We haven't done a do-it before. We'll start with brief exercise 2.9. I've got your workbook and textbook pages listed there. So I'm looking at page 81 in the book, and where it says brief exercise 2.9, from the ledger balances given below, prepare a trial balance. So if you think back to the problem yesterday, I'm going to backtrack to it. You know, yesterday we journalized and then we posted. You would have taken all these numbers out here in the balances. So like this 23, this 12, this 5. You'd take all their final balances and then create this trial balance. Okay. Well, this time in the book, it says that here they all are kind of jumbled up. Do you see where it says accounts payable 9,000, cash 5,800, owner's capital? Do you guys see the funny listing? So basically that's this, only they're just giving it to in a scrambled up list format. Okay. So on your page, do you have a debit and credit column? Do you have a heading in there? Okay. What number line is cash for you guys? Is it number 1? Okay, so that's line 1. Just going to put a little number out there so I remember. Why are we listing cash first when cash was not listed first in the scrambled list? It's an asset. We're going in order of assets. We're going to go in order of the easy thing back here. You'd go in this order right here. Right here. So cash has a $5,800 balance. If you want to put a little A next to cash, just for you to remember that's an asset, you're welcome to do so. If you're using pencil, you can lightly cross off cash in your book. But if you don't feel comfortable writing in the $200, $300 textbook, that's okay. What would you say is the next most liquid asset in that list? In that jumbled list on page 81. Accounts receivable, what's that balance? $3,000. Also an asset. Why do they both have a debit listing? Why are we listing their $5,800 and $3,000 balance in the debit column? Tell me about assets. They have a normal debit balance, and that's the increase side. Okay. Here's the big question. What do you think the book's going to put next? I know what I would probably put next, the next most liquid asset, but let's see if the book does. What other assets do we have? Okay. Looks like that's the only one. What do you think's more liquid, equipment or supplies? I'd actually probably put equipment. Could you sell a tractor or a combine faster than someone would want to buy a half-used stack of a ream of paper? Yeah. So they're really a horse apiece that way. Are we done with the assets in that list? What would make this whole thing easier? Following something like this. They tell you the order, the balances are listed there. But okay, what's the next thing that we're going to list there? We're going to go to the liabilities section. Which one should we put first? Are there two? I see an accounts payable. Do you guys see notes payable? I don't. So we're just going to list accounts payable. We're cruising over to the credit column though, because liabilities are on the right side of the LOT. They have credit balances, and that's where the increase resides. So that's why we've moved over to credit. I can't stress enough. Does credit and debit mean increase and decrease respectively? No. It depends on which side of the T you are on. What's coming next? What would your guess be? Since we don't have any more liabilities. Owner's capital. It's an OE. Also over on the credit side, because it's on the right side of the allo, it's on the, which right means credit. As far as everything else, the order really is driven by the order of the general ledger. Okay. I would say most general ledgers are assets, liabilities, owner's equity, revenue, drawing, or excuse me, expenses. This one is a little bit more jumbled and it doesn't make as much sense. Yes. Uh-huh. No, they don't. I would say they're either alphabetic or by the amount. Yeah. Sometimes they'll like the expense account with the most of a balance, that would be listed first and it would go backwards down to 0. What's annoying is you're always going to be running from something like this that's going to be pre-numbered. So this is the typical format you'd do. All right, we have owner's capital. The next one would be owner's drawing, which would also be OE, but it does not follow the rules of OE. Because if we'd have a credit there, that would make the overall owner's equity go up because the credit on the OE side is a plus. So we have to have a normal debit balance there to offset. Because you're basically like minusing this from the credit column. We only have a couple left. Next we'll go with service revenue. I want you to put revenue next to that one and OE because we're still in the it kind of is both chapter. Soon you will find out revenue is definitely by itself as far as having a classification. We're back to the credit column because that does follow the normal rules. But soon we're going to see 2 more naughty accounts, the expenses. Remember they're in order of alpha or amount. So these are both expenses and right now in this chapter, OE. They're naughty because they technically belong under the owner's equity umbrella, but like drawing, they have to have debit balances to offset the typical credit balance of any owner's equity account. That really concludes the math piece. Now we've got to do the math. What line is your next one on? Notice nothing's listed there, and it's a simple add up all the debits, add up all the credits. We're going to single rule where math is involved, and we are going to double rule at the end. I hope your double rules don't look like mine. Mine are pretty sloppy. And my friends, that's as simple as it is. What do you think? Pretty easy? If you can do it from this jumbled mess the book presents, from here, this will be a piece of cake. When are trial balances used by the accountants? At the end of the fiscal period as they prepare to do the financial statements. Okay. I would like you to try the Do It 2-4 on your own. In the book, you'll find Do It at the top of page 82. In the workbook, you'll find it on page 44. It's the Rekta or Russia company. Let's just take a look at how they order things. I definitely see 1, 2, 3, 4 assets. They put supplies before equipment, but I see 2 liabilities, actually 3 liabilities, capital drawing, and then revenue expense. So they go in the order of 100, 200, 300, 400, 500. Okay. You're going to know what order to put them in pretty easily because do you see how they're numbered? Do you see the, you see cash at 101, you see accounts receivable at 112. Finally, they're going by about tens or give or take. So I'd like you to try to work through this, and in a few minutes I will come back and we'll take a look at the responses.